India's infrastructure sector is on fire right now. And today, we're putting two of the most interesting players head to head: Action Construction and Ajax Engineering. Yep, it's a full-on small-cap showdown, and we're going to break it all down to see who really comes out on top. First things first, just look at this number. 12.2 lakh crore. That is the record-shattering amount of money the Indian government is pumping into infrastructure. This isn't just a budget item, it's a tidal wave of opportunity that's lifting the entire industry. So the billion-dollar question, or trillion-rupee question, I guess, is who's in the best spot to actually cash in on this? We're going to focus on two very specialized small-cap contenders. Now, all small-cap really means is they're nimble, focused companies with a ton of room to grow, and they are both hungry for a piece of this pie. So, with that massive government spending spree setting the scene, let's take a closer look at how our two contenders are getting ready for the main event. And that brings us right to our two main players. Now, these guys aren't trying to do everything. No, they are specialists and they're absolutely crushing it in their own corners of the market. So, in one corner, you have Action Construction Equipment, the world's #1, the top dog when it comes to pick-and-carry cranes. And in the other corner, you've got Ajax Engineering, the undisputed leader right here in India for self-loading concrete mixers. Two champions, two totally different game plans. All right, let's get down to business. It's time for the clash of the numbers. We're going to go round by round, looking at their latest financial results to see who's really packing the bigger punch. And round one, wow, it's a decisive win for Ajax. Just look at that, a massive 48% jump in year-over-year growth, all thanks to landing some huge contracts. Action Construction, on the other hand, well, their quarter was a lot quieter. Their growth was kind of muted, which makes sense, because the monsoon season usually slows down the kind of work their cranes are used for. Okay, so the big takeaway here is that Ajax is growing its sales way, way faster. But, as you and I both know, revenue is just one piece of the puzzle. The real question is, how much of that cash are they actually keeping? Let's talk about profits. And this is where the plot thickens. In round two, Action Construction holds its line, keeping its operating margins super stable, right around a very healthy 15%. But Ajax, despite all that amazing revenue growth, their margins actually got squeezed, dropping from 13% all the way down to 10%. So what happened? Well, they got hit with higher costs thanks to new vehicle emission rules. And all of that brings us to the bottom line, net profit. So for Ajax, even with those tighter margins, their huge jump in sales was enough to power a 15% boost in profit. Pretty good. But for Action, that mix of slow revenue and steady margins actually led to a 5% dip in profits from last year. So you got to give this round to Ajax as well. Okay. For our final round, we need to talk about a super important metric called ROCE. That's Return on Capital Employed. It sounds complicated, but it's not. All it tells you is how good a company is at using its own money to make more money. The higher the number, the better they are at it. Simple as that. And folks, this is where Action Construction lands a massive counterpunch. In this final round, capital efficiency, Action is the clear, undisputed winner. I mean, just look at that. They've practically doubled their ROCE in just a few years, going from 21% to a stunning 40%. That kind of efficiency is a sign of a really well-run, mature business. So we've seen the performance, but what's coming up? You know, despite all their differences, both of these companies are playing in the same field, and that means they're facing some of the exact same challenges. At the end of the day, both of their fortunes are tied to the ups and downs of the infrastructure industry. If that government spending slows down, it's going to hurt their sales, period. And on top of that, if the price of stuff like steel spikes, it's going to chew into profits for both of them. These are just the risks of the game they're in. All right, we've looked at the numbers, we've talked about the risks. Let's wrap this all up with a final tale of the tape. And here it is, the final scorecard. It really is a split decision. Ajax Engineering, no doubt, wins on pure, explosive growth in both revenue and profit. But Action Construction is the absolute champion of stability and efficiency, with those rock-solid margins and just incredible returns on its capital. It's a classic battle, right? Speed versus strength. So now I'm going to turn it over to you. After seeing all the data, who do you think is the better contender here? Is it Ajax, the fast-growing disruptor? Or is it Action, the super-efficient, established leader? It really comes down to what you value more, lightning-fast growth or bulletproof efficiency. A tough choice for sure.